This is On The Charts with Nick Radge, your Australian stock market update, highlighting stocks on the move so that you can invest with confidence and success.
The information in this podcast is general advice only and does not take into account your personal situation. Please consider if it is appropriate to you and consult a licensed professional before making any investment decisions. The information provided is believed to be accurate at the time of recording.
Welcome to the On The Charts podcast, episode 185 for Friday, April 28th, 2017. US markets were reasonably quiet overnight, although yet again oil fell, which capped gains, and uncertainty remains after the release of not much in the way of tax reform data from the Trump administration. The big news is the deluge of earnings that start flowing through this coming week. After market trading last night, we had some large tech names deliver the goods. Amazon jumped 3.8%, Google rose 4.25%, PayPal also jumped almost 7%, and Intel didn't quite make the cut and actually fell 3.5%. This should weigh positively on the tech sector tonight, and then next week we get the big names, Apple and Facebook, amongst many, many others. In other news, the chief of Asia Pacific strategist for TD Securities, Annette Beecher, warned the Australian dollar could fall as far as 62 cents if the Reserve Bank sits tight on interest rates in the face of further US tightening. Also a quiet session in Australia today to round off the week and also the month of April. The main index traded in a tight range for the session, whilst the banks were mostly weaker. We did see Rio and CSL trading higher. 10 network shares continued their plunge, falling another 18% today after yesterday's 19% decline. And Oricobra was the best performer in the small end, adding 7.5%, while Select Harvests was the worst, falling about 8.5%. And a few stocks of interest to finish up the week. Bellamys is back in the news as one of the market's best performers for the week, rising some 15%. Early in the month, it was reported that a Hong Kong-based hedge fund had taken a substantial stake in the company, and it also reported a new CEO has just been installed. Price action has been helped along by A2 Milk upgrade earlier in the week. Analysts aren't overly concerned about the ongoing Bellamys strategy for China, and as such keeping quite a negative outlook, although some have upgraded based on the share price plunge rather than the fundamentals. Now, technically, the stock is in what we call a stage 2 phase of the turnaround. In late 2016, the shares were slammed from $13 down to $4 on massive capitulation, which is the stage 1. And since then, we're seeing a sideways base taking shape. With volume drying up in this phase, it bodes well for an eventual rise. But the important aspect to watch right here is as price tests the up end of the base, is how much selling enters. It's usually a point of supply, as those that didn't initially panic out now take the opportunity to exit on first strength. Once that supply has been exhausted, which does take time, then the stock will be ready to rise again. Kidman Resources is a small miner which owns the world-class Earl Grey lithium deposit, which may prove a spectacular asset if lithium prices continue to remain high. The company operates 6 mines, including Mount Holland, which is a gold and lithium project, with the other 5 scattered around Australia being gold and base metals. Kidman uses cutting-edge mining, milling and exploration methods, spends money in the ground and is delivering results. The stock has had quite the journey over the last 12 months, trading from a low of 9 cents up to recent highs of 82 cents and now back down towards support at 35 cents. The ascent to the highs was extremely impulsive, and the fall from grace is what looks interesting to us. First up, the pattern progression has been reasonably textbook within the scheme of the larger trend, and it's also fallen back to a moderate line of support and done so in what we call a falling wedge pattern. Now, a falling wedge is indicative of a loss of downside momentum and can lead to an explosive reversal. We'll need to see confirmation of bullish momentum resume, but if that can be seen, then there's potential for Kidman to trade back up towards the 65 cent level. My name is Nick Radge. Have a great weekend, and I'll see you on the charts again on Monday.
On The Charts with Nick Radge, brought to you by The Chartist. Join Nick and the team at Noosapalooza Trading and Investment Conference, 20th and 21st of July in beautiful Noosa, Queensland. Visit thechartist.com.au and click on Noosapalooza in the menu for details.